budget expectations 2022-23 in association with our knowledge partner Deloitte. Once again, another January 31st, and expectations of the trade and industry ever increasing year by year. There is a huge background to this budget, because growing instability outside in terms of the international situations on account of COVID, and that continues with the third wave. There's a huge crisis between the US and the other countries in their external environment. As far as domestic things are concerned, we have a GDP forecast at 9.2% growth over the previous year. However, the fiscal deficit, as per the latest reports of certain channels, at 6.6%. And with this background, there is a huge, kind of a focus required on how revenue can be garnered and spent for larger social welfare, with a larger focus on widening poor-rich gap, which they are planning to gap. There's a lot of talks in the background about a wealth tax being levied. What about the rich taxation? Whether there's going to be any further focus? The markets are at 60,000 plus. Last year we saw, the recent years we've seen a lot of focus on capital gains taxation over and above 60,000 over and above lakh of rupees, sorry. And for 60,000 points, then is it anything new more going to come in terms of new provisions? Then the larger questions that the trade and industry have is, will the structural portion of the GST settle down? It's about the 5th anniversary on the GST front. There are a lot of expectations in the trade and industry out of the ministerial committee reports which are due, and will there be any hint in the budget is the larger issue. And the last question being, overall, how will the budget numbers stack up, and what will be the overall encouragement on investment, which is also the need of the hour. With this, I would like to invite a very informative panel we have today. We have Saloni Roy from Deloitte. We have Mr. Preetin Kumar from Deloitte. We have Mr. D.D. Goyal from the industry, who's always a great ardent supporter of Tax India Online. And for the intervention, we have Mr. Rajneesh Kumar, formerly from the department, and Mr. Shailendra Kumar, our editor. And I would now request in the first round, the panelists to outline their expectations in a 3 to 5 minutes by panelist. And I would like to first go over to Saloni Roy, the lady in our group, to start with the courtesy. Saloni, over to you.
Thank you so much. And Sridhar, it's good that I've got the privilege being the lady group. Thank you. I'm thankful to be part of a very distinguished panel. Now, the way I see the budget from an indirect tax perspective, the way it used to be a major event, it's not as much of a major event as it used to be for indirect tax, principally because we have GST council meetings from time to time. However, the last GST council meeting, which was on 31st December, we were expecting to hear some coverage regarding compensation cess, the tenure of compensation cess, maybe on rates. There's a group of ministers which has been constituted on rationalization of rates. We didn't see any such major announcement. Maybe there will be such announcements in the budget on some of these matters. But on rates, I am a little skeptical. I think the government may not necessarily tinker with the rates. GST collections have been showing consistency over the last 6 months or so, and fairly significantly buoyant, robust collections. So may not see any specific major rate changes. I think the major incentives that the government has come out since last year have been the PLI schemes. These have been welcomed significantly by trade and industry, and the largest semiconductor scheme was introduced recently, where the government hopes to give incentives worth 76,000 crores. It's a huge amount that the government has kept as an outlay, as its outlay for supporting this sector. From a customs perspective, last year, 80 exemptions the government had looked at and said these need to be rationalized, removed because they were outdated, and 400 more were being reviewed. Things like manufacturing, import of parts for manufacturing of set-top boxes, MP3 players, things of that nature which are being reviewed. So we may see changes on customs as well. SEZ also, there was a hint made by the Commerce Secretary that there would be an overhaul of the SEZ the scheme. We may hear some announcements around that. It would be good to see if there's some changes around SEZs being allowed to make DTA supplies in INR. I think these are principally what I'd like to state at the start. Back to you, Sridhar.
Okay. Thank you so much for your first round comment, Saloni. We were just expecting to hear, maybe we'll hear from Mr. Goel that though I agree with you, they may not announce anything in the budget speech, but is there any indication that there is something to go about, to look for in the GST law? Anyhow, over to Mr. Pritin Kumar for his views on his expectations as regards the budget 22-23.
Great, thank you, Mr. Sridhar. So typically, whenever we have the budget around the corner, there's always a big buzz around the expectations from the budget. And I have always seen that there is a very thin line between a wish list and expectations. If you ask for a wish list, there'll be a long list of things that taxpayers, both corporate and individuals, want. So, for example, individuals will always ask for a rationalization of the slab rates. That's always there in the wish list. Whether that is expected or not is a very different question altogether. Similarly, there are always, individuals especially are very keen around some of the aspects you spoke about, the capital gains, cryptocurrency taxation, etc. Companies are thinking about, things like whether there'll be any incentives for them from a corporate tax perspective. And of course, multinationals are wondering how the global rules in international tax are going to play out in India. But maybe just I want to talk maybe about two things really at the beginning. One is that COVID is really, that's on everyone's mind. So how is COVID going to play a role in the budget, and how the government is going to go about it? What is it going to do around COVID for taxpayers? And again, there are two different lenses. One is from a corporate's perspective, and one is from an individual's perspective. The corporates have been spending a lot of money on CSR activities, taking, doing something for society, supporting them, looking at different aspects, say, around health infrastructure, creating awareness, etc. And of course, there's the other side where it's more inward looking. They are supporting the employees and their families on treatments, vaccinations, etc. Unfortunately, today, there is not much clarity around the deductibility of such expenditure. And clearly, there is a need for the government to come out with clear guidelines to say that, yes, all this expenditure that you're incurring for society, for your employees, should be tax deductible, because that's something that corporates have been doing, and the government should support them. So I think that's one part to it. From an individual's perspective, obviously, COVID benefits, there was some clarifications from the government saying that COVID benefits should not be taxable. Of course, that needs to be enshrined in law and made more employee friendly. Because I've realized after talking to certain organizations that some schemes of employers are not really getting covered by that circular. But more importantly, from an employee's perspective, we're all working from home. Today I'm in office incidentally, but I'm also mostly working from home. And so employees are incurring a significant amount of costs as well, right? From connectivity, Wi-Fi, furniture, electricity, space, etc. And there is a growing expectation from employees that there'll be some special deduction for employees for meeting such expenses which they're doing. It's obviously difficult to quantify and produce documentation for it. So the expectation really is that there will be something more around lump sum, benefit that will be given to employees as such overall. So I think that was on COVID. The other piece that I quickly wanted to touch upon was, more on the administrative side around the entire push of the government towards faceless assessments. It's been there for some time now, and it's been an interesting experience, though we've had some teething troubles. Overall, I would say conceptually, it's a good idea given the objectives. However, there are many practical challenges. Submissions are not taken on record, adjournments are not granted, issues around the portal, etc. And the biggest challenge which taxpayers are facing that it's easier to put a point across when you're sitting across the table, even across a virtual table, to be honest. So, in fact, we had a Delhi High Court judgment a couple of days back, which came out with some clear guidelines saying that personal hearing has to be granted to taxpayers at their request. Presently, it's discretionary. It's only allowed in relation to a question of fact. Again, that's very arbitrary. And the High Court has also said that if you want to protect the identity of the assessing officer, you should do that by looking at some technology, by creating a blank screen or, changing the resolution, etc., so that the identity is not disclosed to the taxpayer. So I would think that overall, it's a good policy, but the implementation needs to be better. And the scheme may probably need to be overhauled to make it more taxpayer friendly. I think with that, back to you, Mr. Sridhar.
Thank you so much. Thank you so much. I was also expecting some comments from you, sir, on the international side, whether the e-commerce side of taxation, or if there's anything international side, any expectations that there's going to be any tax, like the famous Google tax, as we call it in India. Any expectations on that? If you could just in a minute say something of what's your view.
Sure, Mr. Sridhar. So I think there are two sides to it. One is the equalization levy, or the Google tax, as it's commonly referred to. So the intent was really to cover digital taxes, but the way it is worded today, even physical activities which have some small online element is covered. And that is clearly not in line with the overall objectives of taxing digital transactions. So this is something which needs to be addressed very urgently, because the classic brick and mortar businesses could also get covered by this equalization levy, which clearly is not the government intent. So that's really the Indian side of things, but there's a far bigger picture, the play that is happening globally around the BEPS project, and India is a big party to it. There are two pillars that worldwide there is a consensus around. Pillar one is around allocation of profits to the countries where to market jurisdictions really. And pillar two talks about a minimum tax of 15% by all companies worldwide. It's really, I'm oversimplifying it. It will take probably an hour to explain what pillar two is all about. But we are moving very fast, and globally 2023 is the timeline. So hopefully we'll get some direction from the government on its thinking around these global rules.
Thank you so much. Thank you. Didi Goyalji, what's your view and your expectations from an industry perspective? I know you have a lot of passion for indirect taxes, but we would like to cover the overall expectation of the trade and industry representing the auto side. You have a lot of experience from this perspective. Can you please give your views?
Good afternoon, Mr. Sridhar. Good afternoon to all PEN members and the good afternoon to the all audience. You and Mr. Pritin has set the context in a very, I would say, appropriate way. There's a difference between wish list and expectation. So let me only spell out 3-4 points of expectation, which in our view and as per the interaction with the North Block officials, we hope in this budget, this is get done. Basically, the union budget must take care of the legislative issues where approval of parliament is needed. That must be part of the budget. So from manufacturing side, let me put point number 1. In September 19, government came out with a very good initiative saying any company which is set up after September 19 and start commercial production before March 23, to encourage manufacturing company, they came out with a concessional income tax rate of 15%. However, after immediately, you can say after 2-3 months, when the companies were planning for their investment and putting a greenfield new manufacturing plant, almost 2 years have been lost because of COVID. So the start date was already fixed. So we have requested individually as well as through our association, SIAM and all that to make it meaningful, kindly extend the date, which is March 23. It is impossible because even now COVID is not completely over. So the companies need some minimum time. It is not a digital, it's a brick mortar. Actual brick mortar, you have to do the foundation, break the land, build the factory. It's not possible. It takes 2-3 years to construct a plant, and it's only for manufacturing. So we are hoping that government would extend that date by 2 years so as to take care of the COVID break, I would say, in between the break, so that this becomes actually meaningful. The second expectation is what Mr. Pritin said on equalization levy. Again, we as association has represented, and we also got, you can say, like through vibes or the body language, that they agree that they have no intention to call it a digital transaction when the two group companies, like in auto, all companies have a holding company outside, and naturally their communication happens on their captive web portal. So it would be irony, or it would be totally against the what we call digital India, that if a company take a print and do a physical courier, then that would be out of equalization levy. But if they communicate digitally through platform, it will be called a digital sale purchase and subject to 2%. Whereas on those things, already the normal custom duty is getting paid, the normal income tax is getting paid. So we as the industry members are expecting a formal clarification, either by way of amending the law or by a CBDT circular, that intra-group communication which is done digitally is not part of digital tax. On the indirect tax, we are really thankful to CBIC for issuing a circular on 5th January on a strange Supreme Court decision of Westinghouse. Again, we had a lot of interaction with the government. They have understood, and rightly they are going to Supreme Court for review. Plus the circular has very clearly said, don't look at only one section note. You have to look at all section note together And you also have to look at all Supreme Court decision on the classification. Do not go only by Westinghouse. Luckily, they have referred to 2-3 critical products. Supreme Court decision, Uniproduct being one, Fiat being both auto industry and another Intact. However, to make it foolproof, we expect the government to come out with a legislative amendment of Section 17, the chapter note, that all section notes to be read together and no section note should be applied in isolation. So legislative amendment to avoid future confusion like Westinghouse, that's our another expectation. I think with that I'll end. These are the 3 critical relating to legislative changes which the government, we expect government will bring. I'm not talking of anything of the wish list. Thank you.
Thank you. Thank you so much. Thank you so much, Goyal ji. Very, very informative. Mainly from your industry point of view, in view of the Westinghouse decision of the Supreme Court. Now I would request Shailendra and our Mr. Rajneesh Kumar to give in their views. Is there anything in the first round that you would like to add in terms of supplement, in terms of your expectation, which is not covered by the panelists, sir? First, Mr. Shailendra, please.
Yeah. Thank you, Mr. Sridhar, and good afternoon to the audiences, all the panelists, everybody, in fact, and very rightly put by all the panelists. In fact, the one point which Mr. Goyal suggested regarding this 15%, the new corporate tax, the bracket, the new scheme, and which he rightly said that it's COVID to persist. It has badly battered the economy worldwide, including ours. And it should be, if the real intention is to promote greenfield projects, naturally it's a time-consuming affair. For every industry, it will take a lot of time. But my expectation, perhaps, which I'm quite confident government will not meet, is that this particular provision should be extended even to the service sector. Why to discriminate, against the services? Because the services have been generating a lot of employment, a lot of jobs in the country. And not necessarily in the government itself. If you recall, the Indian Finance Minister had come up with this various kinds of concessions for the services, and also an attempt to put on the equal footing goods and services both. For instance, if you take this case of MSME, where earlier there used to be 2 different thresholds for investment and turnover, etc., which they have done it. Here also, I guess if it will be better, because I had a few inquiries also from outside India, where some people were very keen that why government is discriminating against the services. So perhaps the whole idea was that, again, the government probably thought that the jobs are created only by the manufacturers, not by the service providers. That is where I see a flaw. That is where the government and the Indian Finance Minister should give a hard look at this scheme, and perhaps it should be extended also to the services. This is one. And apart from that, of course, Mr. Goyal has already explained everything, and Nitin Kumar has talked about rightly on the direct tax side. I expect a lot. So I'll rather expect the panelists to talk about it, and maybe I could supplement it or something. But direct tax side, the individual taxpayers, if the demand has to be given a fresh leg up, that's very important in the economy, and the recession part and the demand somehow. Probably it was a pent-up demand or something, again, the GST figure, which Saloni rightly said that, it has been quite robust for the past 6 months, but we will have to see that, how exactly the GST collection fares in the month of, in any case, we have seen the industrial production going down very badly in the month of December. And then we will have to see how it fares now in January, February. Probably it will pick up after some time. But again, this is very important that the demand has to be sustained. Only then the production in the long term will be sustained. Otherwise, with this disrupted supply chain, it's going to be a tough job for any finance minister to do a repair job. So over to Mr. Rajneesh Kumar. In fact, I mean, probably sir would like to add a few points, and we will keep adding.
Thank you, Shailendra. This year, last 2 years, finance minister has had a very tough time because the collection was also going down, and due to COVID, the expenditure had also been, government had to incur extra expenditure by way of this vaccine purchases, or food to the poor. So these extra burden came on the budget. But this year, what I was saying that the collection has risen very handsomely. So FM has some room to give relief to the general taxpayers. Maybe that they may raise some exemption limits or some tax rebates. Although FMs have been very conservative in giving tax rebates, I mean, for the individuals, because individuals don't have lobby. So, and the collections are very certain. Mostly they're salaried class, or so the deduction is there certain. So I feel that government should give some relief to the public so that demand, this, as you referred to, pent-up demand, that goes up, and ultimately it goes into the economy, and collection goes up. So I hope that some relief will come by way of tax rebates or concessions, or maybe some tax exemption limit may be raised. Something should come.
Right.
Thank you. Over to sir.
Mr. Shailendra, I was just wondering, as one point I was expecting from you, you being so passionate about this services sector of hospitality, travel, and tourism. Once again, those people are underwater. They are in submarine conditions. I was expecting Saloni to say a few things about them, but maybe she must have lost that opportunity. So I thought I'll ask you. So see, nothing is going well for these three groups of industries in the services side. Time and again, you can only blame COVID from March of 2020. It's going to be 2 years, as correctly pointed out by all the panelists. Are you expecting some budget announcement for these particular industry groups? I know it has to go to the GST Council. It is not meant for the government to say that, but at least an indicative shift that the government is in empathy with them would at least do something for that industry. That is the first thing. The second thing that I was expecting, because you are very passionate about this from TIOL, is that there is no talk about the setting up of tribunals. So are you expecting something, in some commitment from the government in the budget speech, that setting up of tribunals will be happening very, very quickly? Forget all the judgments that has happened in the Supreme Court, how things are changing. All those things we'll keep them aside for a time being. If we can come to some middle point and get this started. So these two things, what's your view?
So you're asking Saloni ji, right?
Yeah, no, both you and Saloni.
I left it to Saloni so that she could handle all this. Maybe after she speaks, then I would like to supplement it.
Okay, Saloni.
Okay, yeah. Thank you. So yes, you're right. There are sectors, especially you have rightly pointed out that the hospitality sector has been tremendously impacted. Also, the treatment of tax, GST. Earlier there was this restriction of taking credit. So if you're traveling and that leads to a blockage of input tax credit, the rate of tax had been brought down, but it is something that the hospitality sector, that they may look towards the government at rationalizing it further downwards, so that it is more convenient or conducive to people to travel. Though I do want to say that there have been attempts by people to travel even during COVID times, but it hasn't been to the levels, and it's not a lot of business travel. There may be some leisure travel which has been happening, but business travel has been severely curtailed. And that has led to a significant dent in these revenues. So that's definitely there. And I agree with the point that the services sector has contributed significantly, and India is recognized as a player in the services sector. And we should not in any way reduce that, in any way hamper that advantage that we're seen as a forerunner, a forefront player in the services sector. And we do see competition coming up from other countries now, and we are being perceived as being more expensive than other jurisdictions. And recently there was also a comparison done of our neighboring countries, and it's good. It is to the advantage. I was very happy to see that Bangladesh actually had a higher per capita as compared to India. It was a surprising, a number for me to see. But yes, congratulations to them. But I think we need to do better on various fronts. And yeah. Back to you, Sridhar. And Shailendra, if you want to add a few points, you were waiting for me.
Thanks, Sitan. I rightly put, Saloni, in fact, the tourism is one sector, unfortunately, by nature, by character, up to the neck, deep in trouble. And they need, a tremendous amount of cushion and support. And for that, not necessarily fiscal tool. I guess here, the monetary policy perhaps will be more effective rather than the fiscal policy. Because, good number of small, the tour providers and other service providers engaged in the tourism sector. And they really imply lots of semi-skilled, unskilled, and of course skilled, all three different segments of the labor. They need the cushion of chief finances, because their funds are gone, they have down the shutter, their office gone. In fact, I can tell you my personal experience that, for our TIL Awards first event, we had booked some tickets, from some tour operator, and they have not been able to refund anything. It is 2 years now. And I am not insisting because I know that they are in trouble, And so unfortunately, tourism requires the hotel industry, the taxi service providers, the transport sector, various facets of tourism. Apparently, they need a lot of help. Aviation, in any case, is in a bad shape now. You have seen aviation is down in dumps, and lots of the Boeing and Airbus, they are facing problem. They're scaling down their production, etc. And as Saloni rightly put that, this is where, the Bangladesh apparently has done very well. In fact, exceedingly well in various sectors, including they're giving us very tough time in textile. Rather, we have lost out, a major chunk of our market, to Vietnam and Bangladesh. So, yes, as you rightly put, because I am looking at tourism as one sector which apparently contributes somewhere around 9 to 10% of the GDP, and that itself is a huge chunk. That any sector which contributes 10%, and more than that 10%, it actually accounts for a huge chunk of our labor force. So that is very important. Today in India, what is required is that hand-holding, this unskilled and semi-skilled people who have become jobless, who have come back on the street. That is where the government has to step out and hold their hand and perhaps give them some support. So that is where, as rightly put and rightly reminded by Mr. Sridhar, let me thank you for that. And of course, apart from the tribunal part, perhaps I am not expecting any kind of a statement in the finance budget. That the finance minister's budget speech, because this has to be again approved by the GST Council. So the council is the only forum where a decision has to be taken. Only then Union Finance Minister can make a statement on this. And I guess this is certainly not on the agenda for the time being. But maybe, after this empowered committee headed by Mr. Bomai, the rate rationalization committee, once they submit their report, etc., and a mega long-term maybe roadmap and is worked out along with the tariff, perhaps that is the time when they are going to make some announcement. So I'm expecting it only in the next financial year, not before that.
Thank you, Shailendra. Mr. Pritin, I was just expecting something from you also on this last year, year before last, this larger issue of this ULIP capital gain portion getting taxed in the hands of individuals. In view of the fact that markets have done well, and overall also from a policy perspective, that portion in the life insurance policy was subject to tax. That was a huge surprise for people who are resorting to ULIPs in life insurance. Secondly, the fact that the markets have done very well consistently. I won't use the word always. I will at least use the word consistently. We are touching 60,000 points in terms of the BSE, the Sensex. And considering that, are you expecting any changes to capital gains tax And there was a lot of cry about a couple of months ago from various associations that the 54 EC limit should be increased to 1 crore instead of 50 lakhs investment whenever there is capital gain, and all those kind of provisions. Expecting any focus on capital gains this year, sir?
Right, Mr. Sridhar. So yes, it's a very interesting issue, and which has been bothering investors for quite some time. Where in 2018, the long-term capital gains, which was not taxable, suddenly became taxable. It was a big shock for investors to land up with a 10% tax rate, and there was a very low threshold of 1 lakh given. So anything beyond 1 lakh was taxable in the hands of the investors. So clearly there is, and frankly, that 1 lakh limit is practically meaningless for investors. So this is something that I may probably classify as...
or money control case market question.
Yeah. So as I was saying, this is one area where I would think it's of a wish list than an expectation. To be honest, I don't really expect the government, to be honest, to be doing something about it. But this is something that there is, the government is really, I would say, sorry, investors are really looking forward to some benefits around this. But I haven't heard anything from the government side saying that they'll consider the requests of the taxpayer. Similarly, as you spoke about the 54 EC, this is an exemption from long-term capital gains tax if you invest in specified bonds. There is a cap of 50 lakh on the investments that can be made, and this limit was fixed 15 years back or thereabouts. So again, a long time has passed, and clearly the cap requires a complete relook. So clearly there are expectations or wishes from the investor community side, but really it's to be seen what the government will do about it. And a related aspect when you're talking about capital gains is this issue around cryptocurrencies. I believe someone mentioned that earlier. So that's another area where there's a clear expectation of something coming around in this budgets, because today there are no specific provisions around this. There's a lot of uncertainty. If I were to make a broad statement, well, today it's taxable if you earn any income from cryptocurrencies. The question is how? How do you characterize it? Is it capital gains? Is it business income? Is it income from other sources? How do you compute the income? There is absolutely lack of guidance. There may be different viewpoints possible. It's very critical to have clarity around all these aspects, and which is why there is a clear expectation that the government will, have some sort of a regime to discuss around cryptocurrencies as well in this budget.
So, Mr. Sridhar, I will add one point here, as Nitin rightly put it, that there are a lot of very huge expectation on the crypto thing, and government apparently was working on some kind of bill, which was withdrawn. It was supposed to go back to the cabinet again and probably retabled in the house or something. But unfortunately, it looks like that they are perhaps not going ahead with this bill this time, because a lot of clarity is required, and various experts and different experts are yet to submit their views, etc. But however, even if there is a delay and a separate bill is not going to be tabled in the budget session, and it can be done perhaps during the monsoon session, so far as income tax aspect is concerned, probably some provisions should be there in the act, which could be activated later, notified later, and rightly put that this the dark clouds needs to be cleared first. Because a lot of people who are into this sector and huge investments have gone into it, and some of the agencies, of course, recently we had this DGI apparently demanding service GST, etc., and some people paid also huge amount of service GST. So all those things are fine. But point is that the legitimate players are involved in this. Some serious investors are also involved in this, and the government has to take a view, and at least the CBDT side, the income tax side, whether this stands as a separate class of asset, Let it be defined in the act, and maybe my preference will be that perhaps the government should do as the union, rather the prime minister, in fact, has declared 16th January as the startup day. So maybe the capital gains made out of crypto, perhaps if it is invested or reinvested in a startup, then there is an exemption or something. So that the resources which are coming up from there, the investors have that option if they invest it in the startup, and the startup also get a boost. We don't have to really rely on all kinds of different kind of resources coming from outside India. Perhaps we can locally generate certain resources which could be invested in this. So that is another aspect which I would prefer, but I have very low expectations on this.
Mr. Goel, we were just expecting from you certain views with regard to the faceless assessments in customs. What is the view of the trade and industry? It's more than a year, I must say so. Now, from October 2020, if you take, it's more than a year. That is one aspect which we would like you to look at. And also, are you expecting, is the trade really very happy with the way the GST assessments are settling down for the year 17, 18, and 18, 19, because there has been a lot of talk about this in the market. And last but not the least, what are your expectations on the review of the customs exemptions and if there is any changes in them?
Okay, Mr. Sridhar, I would give my view on the 2-3 points what you have raised, and maybe I will take a liberty to
Please
convey 1 or 2 points on the direct tax. Right. Faceless assessment are definitely a good way looking at the technology available. However, the actual implementation is I would say, a big problem. Who will raise what question and when? And because your physical clearance is upheld, that is the issue. So faceless assessment as a concept, we welcome. It's a good way. Only in actual implementation portion, I think there must be some way out so that the business is not hampered. As far as the GST audits are concerned, let me put it, if it is done it has to be done, there is no doubt. Only thing that it should be done for the substance and not for column filling. In substance, what does it mean is all input credit, whatever has been taken, that should be equal to the tax paid by your supplier. If that is satisfied, to me, that should be the end. Not that you're put in chapter 8708 or 8707 when the rate of duty is same, when you have received the goods. You may say that instead of 18%, you should have charged 28%, but if you would have charged 28%, the recipient would have taken 28% credit. So, luckily, the government invited the trade and industry before launching GST, and in GST model law between 2016 to 2017, many of points, they listened to industry, and I would say very, very fundamental, structural, good points they have brought in. For example, on the valuation, they said between the related party or distinct persons, if the recipient is entitled to take credit, then whatever value is declared on invoice, that would be taken as a final. So it means valuation disputes are out. My wish is if they would have listened fully, and not only the valuation, the rate also should have been part of that, because ultimately, if the recipient is entitled to take credit, then it's only academic exercise. The tax department or the whole Ministry of Finance is not meant for a college debate. It's meant to bring revenue to the government. And if the revenue doesn't get affected, if there is any issue, do it for future. There is no point in putting national manpower in doing the hair splitting. Your GST portions, I think I replied. On the customs exemptions, yes, to me, a simple rate without exemption is the best way. I would like to now take 2 minutes on the direct tax or a general tax as a principle. As a citizen, I think we all should be very, very conscious. In life, tax and death, these are two inevitable things. Don't wish tax not to be paid. And the tax, the nature, if you all understand, it is we earn something, we consume some on our own. The tax is paid to a collective body for again spending back on us. It's not we are giving to anybody else. It's only whether I spend individually or we pool that money and get spent collectively, including for me. If we take in that spirit, to me, tax, we will be all very happy to pay tax. But in a direct tax, due to some historical or political reasons, there is a tendency that after a few years, the fixed amounts would be increased. Exemption limit from 1.5 lakh to 2 lakh, standard deduction from 50,000 to this one, what we hear. This year, maybe standard deduction would go up. Our suggestion, wishlist, I know it will not happen, that it should be linked with an index, like in the capital gains, you have an index, every year index. All those exemptions for the individual taxation, be exemption, be standard deduction, be ATC, all those should be automatically reset every year based on income tax department own. They come out with the index every year that this year the cost of the inflation index has gone by 3%, 4%. So 50,000 becomes 52,000. Take out all this budget related excitement from all these amount based. That was the wish list, but to me that would make the budget much more simpler and fair to both the parties. That's all from me. Thank you.
Yes, sir, rightly said, but let me add here one point, what you said, sir, in fact, for a long time, we have been telling different finance ministers in the last 15, 20 years now, that regarding the refund. And finally, I'm very happy that the refund process has been automated. And the moment you file your returns, etc., particularly the individuals, the corporate refund is getting stuck now, but still, the time gap has reduced. So that is where the CBDT and the government of India has started speeding up refund in such a big way that by 10th of January, I think the figure was about 1.5 lakh crore. I mean, that's a huge refund, which the government has started, giving and speeding up. So maybe a day will come, sir, when your suggestion is very valid suggestion. But the only point is that in direct tax side, individual tax, personal income tax, lots of allowances which are there as part of the law, they have to be made a little more realistic. For instance, this I remember this transport allowance. It was there for such a long time, the 800 rupees. And I still remember, sir, how the 1600, someday I will share that story, how it became 1600 and how much of efforts been into it. Maybe Rajneesh Kumar sir is there. He could perhaps give us some insight about it. But this 1600 itself was it had a several parliamentary debate within CBDT. So, but as you rightly said, yes, that would be a very realistic way of going ahead. And what Saloni said earlier, that today's budget is not what it used to be earlier. We used to look forward to union budget, so that excitement is gone. And if you link it to index, that whatever little excitement is there, that fees is also gone. So we will not be having any webinar then, sir, in future. So yeah, I have a question from Saloni rather. Saloni, maybe, like Kar Vivad Viswas scheme and, the dispute resolution scheme which we had last time for central excise and, the service tax. Are you expecting something similar for customs disputes? Lots of disputes pending in customs, maybe the legacy dispute. I will not say legacy because, that is there for several years. and customs continues to be there. So maybe, do you think that it's the right time for the government to come up with some kind of a similar scheme to put at rest a lot of disputes which are there and unlock some revenue?
Virendra, you're right. You're right. I think the time is right. It's opportune. So we've had amnesty schemes introduced for income tax, and we've had it in the past for service tax and excise. So far, we haven't had it for customs. I think it is appropriate. It's a good opportunity both for taxpayers as well as for the tax authorities to try and close pending matters in the courts. So, and reduce dispute pendencies. So yes, I agree. Of course, we also need the GST appellate tribunal to be set up at the earliest. We've had issues also, with refunds which have been granted, but department is not actually processing the refunds, saying that we want to appeal, and until the appellate tribunal is set up, we will hold. And the order is passed by the tribunal that we will then release your refund. So there's, for both taxpayers as well as for tax authorities, it's an issue, and it's piling up of cases in the High Court. Yeah.
I think now if Pritin and Mr. Rajneesh, if you have anything extra to add to what Shailendra says, then we can look at the table of questions, because we are touching
No, sir.
3:55. So
nothing more to add. You can go ahead.
Comments from your side on the okay. So see, as far as the GST is concerned, while Shailendra and Saloni and everybody are right, the entire kind of thunder has been taken away by the GST Council than the budget. But then still there are so many structural issues which are fit enough for amendment. This is what I was expecting, at least maybe Shailendra and Pritin and Saloni to say a few things on, is that there is nothing wrong if the finance minister indicates in the speech that there is, for example, we have completed 5 years of GST. We have to think about the next decade from 2022, 1st July onwards, on how we would expect our GST to look at, and how it will really fan out in terms of trade facilitation. For example, I don't want to really use, this is nothing to do with the budget. I also know last 3 months, even if you take the reported decisions around attachments, or last 6 months around people visiting factories, people visiting, the last issue of Section 75 implementation date of January of 2022, the ills that it will carry, how the protective circulars are being issued. There is so much of talk of negativity. For example, if today, if a person from the trade and industry stands up and makes a statement, sir, we have gone to that situation that we have converted Section 16 of the CGST Act to a disentitlement section, and that doesn't look totally different from a Section 17, which is the real disentitlement section and which gives negative covenants. Somebody will be really, forced to think. We have come down to that level. We are imposing so many things and arrogating so many parts. Somewhere the government should therefore look at some mechanism where at least if not making a promise, because it's the council's job to make a promise and not the government's from the parliament, but at least an indicative roadmap that these are the things structurally we would recommend the GST Council to take up for review. Is there anything wrong in expecting that, at least, Shailendra, from the budget speech?
No, I think, nothing wrong. But if you look at, for instance, Article 279A of the 101st, the Constitution Amendment Act, all these are the issues which actually it belongs to, the turf of the GST Council, and Union Finance Minister being one of the stakeholders, and unilaterally making a statement on the floor of the House perhaps will not be in a very good taste, because ultimately what happens is that council, if you look at the structure and the constitution and the way the amendment has been done, is again a recommendatory body. And whatever council does and recommends, finally it has to be, approved by the parliament. I mean, normally Parliament doesn't raise objection, etc. If they do it, then it has to go back to the council again. So I think the Union Finance Minister may not be in a very good position on a very strong wicket, to make a statement on behalf of the council, unless the council has been taken into confidence. But as you rightly put it, that the section 16 and 17, finally it is they are merging into a single bucket. That is something which is an area of concern for the industry and trade, and also for the policy makers and the lawmakers. They should take a fresh look, because the intent behind section 16 and 17 are totally different. And that line is getting blurred. I mean, that is one area of concern, and perhaps the council will certainly take a look at it. Good number of policymakers have. I remember this law committee also pointed this out, and some of the VAT commissioners also debated it. Yes, but I think somehow the COVID has upset everything. That you are looking forward to some kind of 5 years roadmap. After 5 years of GST. Yeah, I mean, logically, yes, there should be a white paper, the way how exactly the GST is going to unfold in the coming years. That will help, large manufacturers like, Maruti, for instance, and other investors also. But unfortunately, the COVID has, it has hurt, government also so badly. And the government also needs a lot of revenue to take care of the unprivileged or downtrodden. And that is where, I believe that, whatever recovery process is started, somehow, this is getting kind of, damaged again, the momentum. So if we lose the momentum, then it's a big challenge for the government. And fortunately, they have not really imposed too many new taxes so far, and probably they will not do it this time also. But the relief part also, I am not expecting too much, except on the personal income tax front. Perhaps they will do a little bit of juggling here and there, and some relief. But yes, the clarity part, yes, as you rightly, most of the panelists suggested, that more clarity required, and that clarity I do expect. That is the minimum which this budget can give us.
Actually, from the question and answer board, perhaps, Shailendra, there are about 3 questions. One of them is concerning this. I would read it out for the sake of Saloni and perhaps even Mr. D.D. Goyal. But of course, this doesn't concern the budget directly. I don't know how this panel can answer this. The question evolves around this pending final decision of the Supreme Court with regard to the Mohit Minerals case. And they say that though the Mohit Minerals case is not stayed by the Supreme Court, the audit officers of the GST department are issuing demand for recovery of IGST. Should not CBIC issue any instructions? I don't know how this can be timed with the budget. So I don't think so. It will go along with the budget. But there is one question which I think Saloni can look at it. Is there any possibility of addressing the difficulties created by Rule 9610 of the CGST rules? Is there anything that you are expecting, Saloni, in the budget, if there are any rules amendments proposed?
So I think there will be some changes, on the rules, specifically which ones, because there are many areas where we have challenges. One with the actual rules itself, and also cash flow as well as portal related. So there are gamut of issues. I hope to see that there are amendments. There are issues like I have instances where payment has been made on the GST portal, but it's not reflected. So then it delays the 3B bill of entry. There is you have paid, but it's not populated. It takes time to get uploaded in 2B. There are variation in tax paid and the credit appearing. So those are challenges. We also have situations where deregistration is not possible on the portal. So for a particular category, so there are many procedural issues which need addressal. So I'm hoping that we will see some of that.
I think with this, I think we are on time. It's 4:05. I don't see more than 3 questions on the question answer board, and one or two of them can be answered after that also. So I would now request Shailendra to say a few words and then close the meeting, please.
Yeah, I mean, thank you. I mean, I would like to thank all the panelists, for giving an insight and their expectations. And, of course, let me thank the audiences also for their expectations. In fact, some of them have, probably they are feeling a little more pestered by GST. So they have some questions. Yes, we will handle those questions at the next webinar, which is dedicated to GST issues. But today, we are more focused on the budget. So, let's look forward to a very interesting budget, the budget which has got something for all of us, and ensures that, that nobody is going to have wrinkles on the face. And, so, and it's a tough job for any finance minister for that matter, to ensure, the glowing face for everybody. But anyway, we look forward to something on the personal income tax and some of the issues like crypto, etc., some clarification. And capital gains, etc. And I'm pretty sure that this the budget will have something more for the manufacturing sector, and maybe with respect to the new corporate tax regime, the 50%. Perhaps there would be some more the clarificatory things coming out. So let me thank Mr. Goyal, Saloni, and Kritinji, and Mr. Rajneesh Kumar. Of course, I mean, that is Mr. Sridhar's job, but I am doing it on his behalf. And thank you. And we will connect again. And maybe post-budget, we have our webinar on 2nd. So we will have plenty to talk about on 2nd. So let me thank all of you, all the audiences, all the speakers, and every guest. Thank you.
Thank you so much. Thank you.
Thank you.